Welcome back to our fresh series of podcasts on artificial intelligence, where we break down the forces shaping markets, technology, and the economy. I'm your host, Elisa, and today we're diving deep into a sector that's on everyone's mind: artificial intelligence in 2025. Now, AI isn't just hype anymore. It's transforming industries, driving record-breaking investments, and creating some of the biggest winners on Wall Street. But along with opportunity comes risk. Joining me is our resident analyst who's been tracking the AI boom closely. Thanks for being here.
Always a pleasure, and you're right, AI in 2025 is no longer a side story. It's become the backbone of innovation and a central driver of global growth.
Let's start big picture. What's the state of AI right now? Why is 2025 being called a turning point?
Well, here's the headline. In 2025, US hyperscalers, Amazon, Microsoft, Google, Alphabet, Meta, are projected to commit $400 billion in capital expenditures, much of it toward AI and cloud infrastructure. Even conservative estimates put AI-driven infrastructure spend at $200 billion or more just for incremental growth. These large investments signal how deeply tech firms are betting their future on compute data and networks. We're also seeing AI go sector-specific. In finance, it's being used for fraud detection and portfolio optimization. In healthcare, it's accelerating drug discovery. And in cybersecurity, AI tools are fighting and creating sophisticated cyber attacks. And geopolitically, the US is still leading the charge. But governments worldwide are investing in what's being called the sovereign AI race, essentially a scramble to build national AI capacity for security and competitiveness.
So it's not just business transformation, it's national strategy.
Exactly. AI is becoming infrastructure, like electricity or the internet.
All right, give us the key trends shaping AI investment this year. What should listeners pay attention to?
5 stand out. First, the shift to industry-specific AI solutions. Companies are finding more value in tailored tools than broad models. Second, generative AI is still expanding. Cloud giants are scaling infrastructure to train bigger models every quarter. Third, the sovereign AI race, with billions flowing into domestic AI programs. Fourth, the rise of AI agents, autonomous digital workers that can manage workflows end-to-end. And fifth, energy demand. Data center electricity usage could double by 2026, and that's sparking a whole new conversation about sustainability and grid infrastructure.
That's a powerful mix: tech, politics, and even energy markets all tied together. Now let's talk about the companies listeners should know. Who are the leaders in this space?
Let's start at the top. Nvidia, the king of AI hardware. As of September 2025, Nvidia hit a market cap of about $4.3 trillion, the most valuable company in the world. Its GPUs power nearly every large AI model. But the stock trades at lofty multiples, so expectations are sky high. Microsoft, MSFT, market cap around $2.8 trillion. It's embedding AI into Azure Cloud, Office Copilot, and GitHub. Diversified revenue makes it one of the more balanced AI plays. Alphabet, Google, worth about $2.1 trillion. Google's Gemini models, AI-powered search, and advertising tools keep it a giant in both research and monetization. Oracle, ORCL, not always top of mind, but growing fast in AI cloud infrastructure. Around $900 billion in market cap and eyeing the trillion-dollar mark. Palantir, PLTR, focused on AI-driven data analytics with strong government contracts. Smaller at $30 billion, but with deep exposure to applied AI.
That's quite the lineup, from trillion-dollar titans to speculative moonshots. But with those valuations, risks must be rising too.
Definitely. The risks fall into 5 buckets. 1. Valuations. Many AI names are priced for perfection. Any slowdown could trigger sharp corrections. 2. Regulation. Governments are drafting rules on privacy, bias, and misinformation. Europe's AI Act is already reshaping deployments. 3. Competition. New models and open source projects are emerging fast. Today's leader may not stay on top. 4. Geopolitics. Export restrictions on chips, especially to China, and fragmented supply chains could disrupt growth. 5. Energy sustainability. AI's electricity demands are skyrocketing, which could squeeze margins and spark environmental pushback.
So, as exciting as the story is, it's not without real risks. Let's wrap with the outlook. What do the next 3 years look like for AI investors?
I'd break it into 3 scenarios. Base case, AI revenues grow 20-30% annually. Valuations compress a little, but growth supports double-digit annual returns, about 15 to 25% per year. Bull case, adoption accelerates, AI agents prove commercially viable, and regulation stays light. Returns could reach 25 to 35% annually. Bear case, regulations bite, energy costs rise, and valuations reset hard. In that case, returns could be flat or negative over 3 years. The reality will probably land between base and bull. Strong growth, but with plenty of volatility along the way. Some of the recent references to illustrate how different analysts set their growth expectations? Markets. And markets projects the AI market will grow from about USD 371.7 billion in 2025 to USD 407 billion by 2032, implying a KGR around 30.6%. Grandview Research forecasts stock for 35.9% CAGR from 2025 to 2030 for AI markets. Precedence Research is more conservative, estimating modern 19.2% CAGR from 2025 to 2034 to reach USD 3,680 billion by 2034. Fortune Business Insights sees 29.2% CAGR from 2025 to 2032 for the AI industry.
So investors need to buckle up and diversify.
Exactly. Hold the mega caps like Nvidia, Microsoft, and Alphabet as your core. Add mid-sized names like Oracle and Palantir for enterprise exposure. If you've got risk appetite, sprinkle in speculative plays like QUBT. Or for simplicity, AI-themed ETFs can give diversified exposure. The key is discipline. Don't get caught up in the hype cycle. Let's have a look at some of the best performing AI or AI-adjacent ETFs over a recent one-year period include ARKQ, approximately plus 82.19%, Defiance Quantum ETF QTUM, approximately plus 64.15%. SoIC Themes Generative Artificial Intelligence ETF, approximately plus 45.04%. UTAI, Wisdom Tree AI and Innovation, approximately plus 41.37%. These specialist or frontier generative AI ETFs tend to have higher returns when the AI tech theme is in favor, but also high volatility and drawdowns.
So what are the projects for 2026?
Let's start with the big picture. The global AI market is projected to reach $900 billion by 2026, up from $515 billion in 2023, representing a 20.4% compound annual growth rate.
Impressive growth, and here in the United States, the AI market is expected to hit $299.64 billion by 2026, growing at a staggering 40.2% annually between 2021 and 2028 per keywords everywhere.
AI isn't just about software. Data centers are a major part of this boom. Analysts estimate that AI will drive nearly 40% of global data center spending in 2026, covering systems, software, and services. These insights come from the Next platform.
Clearly, AI isn't just a technology trend. It's reshaping markets, industries, and infrastructure on a massive scale.
Energy demand is also being impacted. AI-related data centers are expected to contribute to 10% of the global increase in electricity use by 2035, with the US alone accounting for 40% of this rise.
That's a fantastic breakdown. AI in 2025 is clearly structural, transformative, and shaping not just technology, but energy, politics, and markets. Thanks so much for joining.
Always a pleasure.
And to our listeners, remember, opportunity comes with risk. Balance your excitement with smart diversification. Please remember, this session is for informational purposes only and not financial advice. Always do your own due diligence before making investment decisions. That's it for today's deep dive into the AI investment revolution. If you enjoyed this episode, hit follow and share it with a friend who's watching the AI space closely. We'll see you next time.